don't know Jason or SentimenTrader.com, you really should and take a look at it. A lot of top traders and analysts that are giving you the ideas to actually get their stuff from Jason. They read Jason's stuff, so we should all try to get it from the source. I'm glad he could spend some time with us on this Friday. Thanks, Jason, for hanging out with us today.
Absolutely.
I know we have Winter Olympics coming up. I heard you train for the triathlons, but do you train for any winter sports as well?
I actually did a biathlon a few weeks ago. Not skiing. I ran instead of skiing. I'm not much of a skier. I'm 6'7", so
really,
I'm the proverbial awkward big white guy. So me in long skinny skis is not a good mix. So I try and get outside as much as possible. And like you said, I'm training for a triathlon. So as much as I can get outside doing any kind of cross training, I'll do it.
Will we see you on Team USA in 2 more years, or not quite?
I don't think so. I'm 38, so for sporting wise, I'm getting up there in age. Actually, though, they do televise Ironman Wisconsin, usually late in the fall. So you might see me gliding past there at some point. So keep an eye.
Oh, really? Can you put a link on SentimenTrader for us to see?
I will. If I end up showing up and don't look too, if I'm not bent over heaving, I'll certainly do that.
Well, it sounds like if you bend over, you're still taller than some people, so I'm sure you'll be fine. You have a finance background, but that's not even really what got you into this business, is it?
It's really not. Like you said, I did go to college for finance and economics. My first job out of college was actually as a controller for a small bicycle manufacturer, so it was more on the accounting side. Mm-hmm. I hated it. I went home with a headache every day dealing with tax issues and things like that. It was not my cup of tea. Mm-hmm. And I knew I wanted to get involved with the market somehow, so I went to a temp agency and I said, scour every local brokerage firm, get me in the door no matter what. If I have to work in the mailroom, I'll do it. And they called actually later that afternoon and said, well, we have something for you, but it is in the mailroom. And I said, you know what, I'll take it. And it was base pay. I mean, it was, minimum wage, the whole deal. And literally I was in the mailroom. I was stuffing envelopes to send out IRA kits and the very basic stuff. But the good thing is this was Wells Fargo. This was in the early 1990s. It was kind of when the first discount brokerage stuff was really getting rolling. It was really starting to pick up steam. They did have an online presence later on that was really bare bones. But, I mean, when I started, there was just a handful of people there. Mm-hmm. And the good thing is I was passionate about the business. I really wanted to learn, and I got in on the ground floor. And as Wells Fargo built up that business, I got more responsibility, and by the time I left, they had over 300 people working there. So I really got to learn every aspect of the business, and ended up managing the operations side of their discount brokerage, which included options trading, mergers and acquisitions for clients, all that kind of stuff. So the thing that really got me interested in Sentiment actually was the margin side of it and the options side to a lesser degree. But my margin clerks and myself would make these margin calls and listen to customers, and they were unbelievably emotional with some of these calls. And what I really found striking was that they personalized a lot of these stocks. Qualcomm was a popular one, actually. And this one lady in particular, she kept calling it my Qualcomm.
Was this later on? Was this later on in the tech bubble, or is it a little before?
Probably 96, 97-ish, going into 98, thereabouts. And there were some volatile times at that point, and when we got those big swift drops, they would get margin calls, and there was no logic involved with their buying and selling decisions. It was pure emotion, and that happens when people are leveraged. And so that's what really piqued my interest in Sentiment in particular, was just why these people were deciding to sell or send in more cash or whatever decision they made. Yeah. And so I made some very basic indicators based on like the flow of applications we were getting for margin and options trading, the flow of selling that we were getting when we were making margin calls, as opposed to people bringing cash in. And I started to line those up with market movements against the Dow, and I was struck at how often when we would get these surges in margin calls, and people selling and dumping stock, that often that's when the market was about to bottom.
I want to go back to when you first started at Wells Fargo, and can you explain a little what you think your success was over there? What for all the people in the mailroom or people getting coffee who are trying to get to be a professional in the business? Would you say your success was more because you just got in at a good time when Wells Fargo was taking off, or because of certain things that you did that you had control and having the passion for the business?
I think anybody will say that luck is a big part of it, and timing. I didn't see it at the time. I was leaving a decent salary to go to the bottom rung, basically. Mm-hmm. I didn't know that the business was going to take off. I didn't know that discount brokerage in particular was going to really catch that wave higher. So some of it was just dumb luck. I would say that's probably 50%. The other 50% was I worked my butt off. I didn't care that I was in the mailroom. I wanted to be there, and the three or four other people that were there, to them it was a job, and they couldn't wait to go home, and they came in late, and I was the exact opposite. I was there early. I stayed late. I asked my boss, what else can I do? What else can I learn? And I always tried to make myself available to learn new things and to suck up as much as I possibly could.
Right.
And, people see that. People see that you have a passion for something and interest in it.
You say you had a lot of things that most people outside of brokerage might not have access to, but how do you think any of those things help you become the kind of trader you are now, being successful?
I learned to not use margin. That was lesson number one. I saw these people, they were doing very well. A lot of these people had run up their accounts 400, 500% over a matter of years. Wow. And they let it get to their heads. They got really giddy. They got very arrogant. Taking some of those customer service calls, you just had to kind of put your hand over the microphone and say, oh my God, I can't believe people act like this. Yeah. In the end, a lot of them got their comeuppance. They pressed too hard. And that was a huge lesson for me. Number one, not to stretch myself too thin because you become emotional. And number two, just having that humility, and that's a lesson I've learned year after year after year. It's something that never goes away. No matter what kind of hot streak you're on, something is going to happen. The market's going to change. Something is going to happen to make you hit a few losers again. And so you can't press things too hard because it happens in cycles.
Was it while you were there that you finally figured out how the markets work, that you were comfortable doing this full time, or was that after you came out and started doing your newsletters?
I took a leap of faith. After Wells Fargo, I reached a kind of a plateau there. I wasn't really learning anything new. I didn't think I was going to. So I jumped to a hedge fund, thinking that would give me a different kind of exposure to the business. Mm-hmm. And I learned that from the operations side, it's really pretty much the same thing. There wasn't really any difference to it. So I didn't stay there very long. Mm-hmm. And my wife, bless her, she said, you hate it. Every day you can't, you don't want to go into work, so do it yourself. And so I did. I started trading on my own, started the website, and it would have been tough from that point, just trading on my own without the site. That really helped, having that extra revenue as a backup, not having to rely so much on the trading income. That it's tough. Unless you have a good capital base to come from, it's tough to trade for a living.
Right.
And so having those two in conjunction was really a godsend.
Mm-hmm. I want to ask you one last question. What kind of questions that you get asked most often, and versus what kind of questions that do you think people should be asking you from all your experience, and like you said, the margin calls that you always got that weren't logical?
I would say by far people are too focused on accuracy, winning percentage, mm-hmm. and not nearly enough are focused on expectancy. Average wins and the percentage of wins versus average loss and percentage of losses. Van Tharp has great books about that. Just to get an idea of what a correct perspective is, really always having that focus on losses and how much you could lose. Doesn't matter if you have 99 winning trades in a row, that one loser can erase all of it.
Great. Thanks, Jason. Well, we'll have Jason on again for Heist Labs in the next video, and we'll get Jason's insights on his must-read website, SentimenTrader.com. And remember, no matter where you are, you can see Jason present live at the Three Gurus Global Trading Webinar on March 3rd, 2010.